Hi, welcome back to FragVision. I'm actually here today with Steve Edge, who's the proprietor of Asia Etrading and is one of the foremost commentators on market structures and financial markets in Asia. Hey Steve, how are you?
Good, Steve. Thanks for having me here today.
But first of all, Steve, I just wanted to say, we've done a number of events together in Hong Kong, in Singapore, Sydney. When you sit at your desk and think about Asia as a region, where do you see the sort of hot areas in terms of real change that's been happening?
Well, certainly in Australia, I think everyone knows that the competition that's now going on. Certainly, there's been quite an investment from the vendors, from the brokers, from the market data vendors to invest in that market and try to capitalize or take advantage or fill the void for what's going on in that industry. Best execution, unbundling will certainly come next.
That's one area that's grabbed a lot of headlines in terms of Chi-X, the response from ASX, which has been very robust in terms of all the different things it's changed. But yet, Chi-X hasn't been going for that long, but looks like it's got some traction. What do you sort of think, and how do you see that one playing out, Steve?
Well, Australia is definitely an interesting market in terms of competition and what's going on down there. They have a very mature pension industry. I think what they've done in the short amount of time that they've been operating is commendable. They started slow, they wanted to take baby steps, and they did go through some settlement cycles, and now they're offering all 200 names in the SPY, 200 plus ETFs, and people are realizing a price improvement.
I was talking to some guys about this, and I was wondering how important it is that the HFC community that supported BATS and Chi-X and Turquoise in Europe sets down roots in Australia. Do you think that's an important factor?
Well, that'll certainly.
That'll happen anyway.
That'll accelerate the volumes.
Right.
People will see opportunities to buy in one venue and sell in the other. I mean, high frequency trading goes on, pairs trading or some other arbitrage.
Well, I think that was the big point. When we were in Sydney together, that anyone who thinks in Australia that for some reason what's happened all throughout the rest of the world won't happen in Australia is probably fairly misguided. It's just a question of what the final shape or form is. But I mean, what are the other areas that
well, certainly Japan.
Right.
We're seeing the acceleration of the fragmentation, particularly when Chi-X entered the market. Their volumes seem to have slipped compared to Japan Next, which is still growing. And that market is obviously much bigger. It could certainly support at least another one or two PTS venues. The HFT guys are there right now. Goldman trades Japan Next as a shareholder of Japan Next, and they trade pretty hard in the HFT space. Intervenue primary versus Japan Next. It can only grow, and then with the high frequency trading that's going to go on, there's going to be the need for tools, trade performance, transaction cost analysis, surveillance. People don't want to see those toxic orders coming into their markets, and some vendors or brokers, particularly Liquidnet, they raise the flag and say, hey, we don't want to have HFT guys in our venue. They're not good. So that's the card they're playing. But Japan and Australia are the two big markets when it comes to.
I think it was interesting in Japan that when Chi-X landed, one of the biggest beneficiaries was actually Japan Next, because that kind of legitimized the whole alternative venue thing, because Japan Next has existed there as a PTS for, 10 years or something. But once Chi-X had landed, people made that push to buy the smart order routing technology, which obviously then meant, the more technology that's out there that can reach these venues, they all benefit. And I think it's kind of interesting that you can see the Chi-X volume go up and the SBI volume go up as well.
I think the catalyst was more the JSCC clearing the PTS trades, because but that happened. There was no coincidence that Chi-X started their business when the JSCC announced that they were going to clear trades, because before then the cost of trading was just too high. It was manual. There was counterparty risk. It wasn't sexy. But there is something to be said with Chi-X entering the market and legitimizing it. But they've brought their brand with them into the market. They brought all their clients from London and the U.S. to trade into Japan, because they know what they want. They know that they can save 10 basis points, where Japan Next was more focused on the local market, and they didn't understand what paying half a spread was, or crossing the spread. That wasn't important to them. So yes, Chi-X had some influence, but I think there were some structural changes, particularly with the JSCC.
That made it worthwhile investing in the technology to route away from the primary market.
I know Japanex dropped their prices because of that, for example. So, who's to say?
And coming back to say, your home now, Hong Kong. It's interesting again that market has, its monopoly enshrined in law almost. Do you ever see that changing? And is there ever going to be? Are we ever going to see the sort of fragmentation that we've seen, in the US and Europe, and perhaps now seeing elsewhere in some places in Asia? Is that ever likely to happen? Do you think in Hong Kong?
Well, you do have the internalization, the brokers internalizing, and I've heard between 2 and 10% of flow crosses internally. So in that regard, there is competition. I think what Hong Kong has been positioning itself has been really a gateway to China, to facilitating IPOs, money in, money out. But I think the IPO train is slowing down or coming to a head. And they're now looking at investing in their secondary market, and they just completed their AMS 3.8 upgrade, which reduced latency and increased orders per second. Not world class, but they're moving in the right direction. They made some key hires. Joe Meyer, ex-Chi-X, the Chi-X Australia Technology CTO. They brought him to run the technology as well. So they've just this year the Chen Quan-O data center. They're going to put their new matching engine. They're going to offer colo. So you can see that the investment in the secondary market is coming. It'll all be part of what the mainland wants, and it's
right. So they're driven by what the mainland,
I'm guessing,
ultimately wants. I think you're
there'll
probably
be
right
there. The competition will come, but it will be in the form of trading Shanghai, Shenzhen, and Hong Kong, and perhaps you might even see Hong Kong and Shenzhen merge. Or Hong Kong has the GEM market, which is their small medium enterprise, and the Shenzhen has a similar GEM market.
And then looking forwards, I mean, the other areas that seem to come up on the radar are Korea, that looks like it's going to relax, or introduce some sort of competition into its marketplace maybe next year, and India, where as you probably saw, the Delhi Stock Exchange has been resuscitated, has bought MIT as a matching platform from the LSE.
Particularly in India, the competition is going on. Let's face it, NSE is the primary, BSE is the secondary. It does 20% of the volume. There is competition there. It's just a two-horse show. The MCX SX applied for their exchange license. They got denied it. They're appealing to SEBI, the regulator, to have that overturned. I think, but the problem with India is the clearing, because the BSE and the NSE have their own clearinghouse. The trades on one are not fungible with the other, and the spreads are so tight in those markets that it's two basis points or 3 basis points on the NSE alone. So capturing the spread, how much does it really save? Is it worth spending that money on technology and infrastructure? But that being said, there is no depth in the order book. You'll only see bids and asks, but once you go 2 or 3 bids deep, you won't see anything there. So I think SEBI is being careful, and they'll need to do something with their clearing apparatus. And once that happens, then I think you'll see some more need for technology and smart order routing.
What are you anticipating for what's going to happen in Korea, and how quickly?
They probably need to do consultation, bring it to Parliament, pass the laws, rewrite the regulations. It could take some time, but they do see a need, and I've seen them in the past. They have a technology arm called Coscom, which they've been going out and doing exchange deals like NYSE Technologies or Nasdaq OMX to do matching engines for I think Cambodia and Laos and Mongolia. So they're one of the very few Asia exchanges that is in fact selling technology trading systems against the major players. I know that the largest brokerage is Samsung Securities, and I read somewhere, I believe it's a 1/20th the size of Goldman. So if they want to have an investment banking industry, a proper trading industry, they've got a long way to go.
And finally, Steve, what are your thoughts on the Pan-Asian exchange and that the connectivity between all those different exchanges?
Well, the problem is clearing. Can you trade?
Exactly.
Can you trade your OCBC in Thailand, and how's the currency going to or how is the trade going to settle on which currency and which clearinghouse? I think that's the big question mark. in terms of putting these exchanges together, I think it's clever. They have a long way to go in terms of their growth. It gives them a common platform for a broker who is in Malaysia to offer trading to Philippines, Singapore. So it's clever in that regard, but I think that they haven't dotted the I's across the T's
Exactly.
to
I think
come
it's a
up
very
with.
long way to go on that one.
It's a very long way to go, but it's a step in the right direction, and it could be a catalyst for pan-Asia competition.
I think one of the things that's evident is there is a lot of change happening across Asia, and we're also going to be seeing a lot more change to come. But thank you very much for coming in, and we look forward to sharing some more ideas with you again soon. Cheers.
Thanks for having me, Steve.